All right, welcome back to another Bitcoin video. Based on AriasWave, we're looking at the patterns. We're looking at what this could be. So overnight, I posted a chart. Basically, last night I posted a chart here in Australia, talking about how we're looking for a move higher. We did make a bit of profit on the way up, and then we had a pullback. So my stop initially was down here at the lows, but now we have a new support level, which I'll get to in a second. So this whole idea of a bullish move goes back to the idea that, okay, yes, we topped out in a wave 5 since 2022, but the wave 5 itself, I believe it could be expanding to the upside. So 3 being here in March 2024, wave 4 ended here 5th of November 2024. So it's basically the similar case here that we're seeing where we had a small wave E and a breakup. This is happening at the small degree as well. And this is based on the idea that this is not wave 5, this is wave 1 of wave 5, right? So just going back to the daily chart quickly just to sort of highlight this a little bit more. The reason for this idea is because, okay, fine, we had a 5-wave move completed. Now, my interpretation of this move was wave 1 was tiny. So wave 1 being tiny, having an expanded wave 2 correction, we had a wave 3. So if wave 1 be the smallest, wave 3 and 5 could be similar in length. So that, to me, it's really based off that. So if you didn't understand this pattern down here, then you might not make that call so easily. So taking the length of wave 3, I basically extrapolate it from the end of wave 4 and say, you know what, we could see prices go to 200,000, but not in a straight line. And I believe that wave 3 of wave 5, right, it could take us to at least 130,000. The 162,000 is a 1.618 Fibonacci extension of wave 1. And it's not just that, it's also basically the corrective patterns that we're seeing here. If we would have seen a break that continued lower and broke the start of that move, I wouldn't be so bullish right now. But because we didn't see that, we saw a corrective pattern unfold here, and I want to talk about that a little bit more in closer up close. So if I just put a Fibonacci extension retracement on this, you can see that it hanged around 0.618 a lot. It almost went to 0.786, didn't quite make it. But for me, it's more the structure of the waves that's more important. So here you had a wave A in brackets. So we had a complex wave A zigzag. So that's the biggest part of the correction. So we had an A, B, C, D, E, and then the C wave down here. We had a B wave bounce, a C, D, E pattern, right? Now we haven't broken the beginning of the E wave yet, but that's coming shortly, I believe, at about 93,000. So what's making me so bullish down here? Well, apart from the fact that a CDE pattern means the end of a correction, it's also this down here, which I've been paying close attention to over the last few days. And it's actually quite interesting because this is a week 5 wave move here. They move up in threes. You had an A, B, C, D, E. So this is another CDE pattern in the shape of a zigzag. This is why Elliott Wave got it wrong. This is why this is AriasWave. So that's actually a C, D, E pattern. So there's actually a zigzag in the middle there. Makes it look like a zigzag in its totality, but it's actually not. There's actually 3 waves going on here, a C, D, and E. After that, we saw the break of the beginning of wave E. For that wave 2, 1, A, B, C. I thought this was a CDE pattern here. That's why I traded it higher, and it turned out to be a D wave. But that's okay. Still in profit, because after all, we've already made the lowest part of that move. I believe, not guaranteed just yet. Okay. You're supposed to see wave E's get higher and more expanded as the 5-wave move continues higher or begins to sort of erupt and develop. So I think that a break of this high up here will definitely confirm that we are in a third of a third wave, and this should start pumping much higher. So 87,443 is the level to watch. If we break that level, this low here will be support for the end of wave 2 of wave 3. So that's important. Apart from that, I suppose, yeah, looking closer at what caused support to happen would be probably a mix of a couple of things. The previous triangle within the D wave, I believe the midpoint there was support, as well as potentially the top of the previous impulsive move back here. So that would be when the first wave 1 of wave 3 ended on Saturday. That particular point there is usually like a case of, resistance becoming support once you break out of that. And wave D is the perfect wave to basically do that. So in essence, when a D wave expands, it means it's breaking out. It's usually strength in the move. See back here where the D wave didn't break out, it was still the minor wave 2 and needed confirmation. Now we're sort of starting to make higher lows and higher highs. So at this point, it's not definitely guaranteed that this support area is guaranteed to be support. But if you look closely, you can see there's also the 200 period moving average on the 5-minute chart. And there's a confluence of things here going on. It's the end of the first wave. It's also the 200 period moving average. It's also that midway point of that triangle of wave D. So yeah, sure, we could see wave E go lower. We could, but typically you won't see that, like I showed you back on the previous time frame when I showed you that wave E's can be small. And I'll just go back to show you that again. Back here in October last year, we did see a similar scenario retest that area. It did go below it, but it was a very small E wave before we broke up above it. So it's a very similar pattern going on right now at the small degree. So that one there is just an example of how, you break out, you retest. But yeah, I mean, 1-2 is the key here. It's a 1-2 pattern. And at the smaller degree, we have a couple of 1-2s. So is this setting up for a move higher? Well, we're going to find out. Like I told you before, the target is minimum 130, 162, possible a doubling of current prices. So I suppose that's in a nutshell what I've been trying to go long on. It's now sort of become a little bit clearer that that's the case. That's what we're looking at, and the way that we're going to do it, according to AriasWave, is to follow the waves. You only I should be trading only a break of the start of wave E. If you find a reason to buy at support, fine, do it. At this point in time, that was a good move there. If this continues higher and doesn't come back down and go below this, support shelf, you could call it, and continues higher, that's fine. The reason why it's coming down back now is probably going to retest that 200 period moving average on the 1-minute chart. I know this is a really small degree, but the pattern itself suggests a 1, 2, 3, 4, 5 with the end of that happening here. Now, in terms of breaking, the beginning of the 5th wave of this minor move, it hasn't quite done it yet. So, I'd say just, be patient. Good place to go long with a small, maintain good risk management, obviously, but you could always add to your position later. Start small, accumulate, and then add to your position. Up here, a break of 87,459 is a good confirmation point, especially if it starts breaking up sharply. But 93,000 is the one to watch. That is the most important for the whole structure, because that's where it will confirm that basically the start of wave E broken, and this is not an impulsive move that's going to continue lower, or any other pattern that could potentially fit the criteria for this setup, for this structure. Now, I did previously think that this might be a D wave down if we were mega bearish, but yeah, I'm not really feeling that, especially after looking at this structure here. It doesn't give me, I don't see an ABCD, like an ABC, not even an ABC pattern. I don't see an ABC pattern here. So for me, I'm just going to be watching this area here where we are now, and if it goes lower or if it breaks higher, this is a very important area, because it could be the low, the end of wave E, or it could be just, you know, the beginning of a 5-wave move down. And you know what, it's possible, but like I said, breaking above that level there is going to confirm that it's fine. It's going to keep going higher and then head to 93,000. But the key level here, I suppose I should just quickly mention it, is yeah, 85,437. If this one holds, and if it breaks above 87,459, doesn't make a new low there below that area that I told you about, then that's fine. If it happens to go lower and maybe perhaps try to retest the 1,000 period moving average back down here, then I'd have to just basically update you, and you know, we'd be waiting for a 5-wave move, and then obviously a bounce, and it's just going to cause a larger stop to occur. So won't say too much about that now, but hopefully that's giving you an idea of my long trade idea, which I'll link down below. Thanks for watching.